What's up, millennials? Senseonics has a potential big catalyst coming up which could lead to a boost in the stock price. Today we're going to combine that potential catalyst with technical analysis to see if this could be an interesting swing trade or not. Let's do it! So first of all, let's talk a little bit about that potential catalyst and about the products of Senseonics. First of all, we can see that this company is producing unique implantable continuous glucose monitoring systems. And if we go to the bottom of this page on Seeking Alpha, we can see that the Eversense technology which they apply is unique because it is a long-term CGM system, so a long-term continuous glucose monitoring system, which actually can last up to 180 days, which is just 7 to 14 days if you look at the competitors. So that's pretty insane. And it's also the only one which is implantable underneath the skin and which works with a removable transmitter too. Now, according to this text, we can see that they basically have two products. They have the Eversense and the Eversense XL. The Eversense can last up to 90 days, and this one already has FDA approval, so approval from the Food and Drug Administration since 2018, of course. And then they have also the Eversense XL, which can last up to 180 days. Now, this is already approved, of course, in Europe, and we also expect to have FDA approval by the end of the third quarter of this year. So that can definitely be a potential catalyst for this stock this year. Now, do keep in mind that if you look at their latest 10K, their latest annual report, we can see that the stock is not relatively cheap right now, because if you look at the total revenue, we can see that it was about $5 million in 2020 versus $21 million in 2019. And if you take into account that they currently have a market cap of $900 million, we can see that the valuation of Senseonics is definitely not cheap. So you can make the case also that an FDA approval of the Eversense XL is already priced in the stock. Now, before we hop into the technical analysis, tomorrow I'm going to be launching a program about technical analysis for absolute beginners. So if you also want to learn how to make objective decisions without letting your emotions make decisions for you, then you can sign up at nishami.com/TA to stay up to date. So for this video, I would like to show you a bullish side, a bearish side, and then also my interpretation, my opinion about the current technical analysis. So let's actually start with the bullish side. And let's first talk a little bit about the 8 and the 13 exponential moving averages, which in my case are this yellow line over here, that is the 8 daily EMA, and the blue line is the 13 daily EMA, because we are on the daily chart right now. So every candlestick, every vertical bar you see is 1 day of price action. Now, the thing is, before we had this massive run up, we see that the price action was held up relatively well because of that 8 daily exponential moving average. That stopped being the case at the end of February 2021, of course. Then we started to have this downtrend where the price action was staying below the 8 and also below the 13 daily exponential moving average later on. And that has been the case until now, because right now we see that the price action is back above that 8 daily exponential moving average. And right now, since the last couple of trading days, we are also above the 13 daily EMA. So that is definitely a good first sign. If we then take a look at the RSI, it also seems to be pretty constructive, because right now we are trading back above the EMA on the RSI. So the RSI is this blue line over here, and the white line is the EMA on the RSI. If we go back in time, we can see that at the end of February, when we started that downtrend to the downside, of course, we had a nice little red signal on the RSI, meaning that the RSI was quite overbought at that time. Then we started to trade below the EMA on the RSI, all the way up to right now, just a few trading days ago, basically on the 24th of April, when we started to trade back above the EMA on the RSI. So that is definitely a good sign. And we can also see that the EMA in general is starting to move, is starting to crawl a little bit more to the upside. At the end of February, it was downtrending, but right now we do seem to have a slight reversal going on that EMA on the RSI. And also, if we take a look at the MACD, we have a very similar posture. We can see that at the end of February, again, when we had that downtrend, we had a MACD cross below the signal line. So the MACD is this blue line over here. The signal line is represented by this orange line. So we had that bearish cross to the downside. But right now, just a few days ago, on the 24th or 26th of April, actually, we did see a cross back to the upside, which is always a good sign. And by the way, do keep in mind that we have earnings coming up on the 13th of May, so that can definitely be a catalyst to move the price action to the upside or downside, of course. It's not necessarily bullish or bearish, but it can definitely lead to price action going to one direction. And then let's now talk about the bearish side of things, because there are definitely a few bearish things going on. First of all, we can see that we are still in a downtrend. We are still making lower highs and lower lows. We are, we did create this high over here. Then we created a lower high, lower high, lower high, and now potentially a lower high too, which is actually very likely going to happen. And we also had a low, a lower low, and a lower low. So the question is, are we going to continue making lower lows, or is it now going to revert back to the upside? Are we now going to create a higher low instead? So far we are still in a downtrend, but I would like to see a higher low first. Apart from that, we are also still trading below the 55 exponential moving average. So that is this white line over here, which usually is used a lot as support or resistance. In this case, we are still trading below it. So I definitely think there is going to be some resistance around that level of $2.40, $2.45 more or less. Because yes, also at $2.40, there is some resistance going on. If we go back to this price action in the previous times, in the previous months, since January more or less, we saw a massive low over here around that level of $2.40. We saw that same massive low at the beginning of March and also at the end of March. And right now, let's see if we're actually going to be using it right now as resistance instead, alongside with that 55 EMA. And the last thing I'll mention here is the decrease in volume right now. So we had quite a lot of volume in that uptrend, of course. Then we had a downtrend, still quite a lot of volume, but that volume is waning right now to the downside. And I'd be looking for more volume to accompany a potential reversal of Senseonics. So then my opinion about the technical analysis of Senseonics. Well, with the current technical analysis setup that we have, I'm leaning a little bit more to the downside, to the bearish side in the short term. And with short term, I mean a couple of trading days or potentially even a couple of trading weeks, because we are still in a downtrend, because we do have resistance because of that 55 EMA and also because of the $2.40 level, and also because we still have relatively low volume. So I wouldn't mind seeing one more move to the downside, then create a higher low compared to the low we have been seeing in the past versus the last low, of course, and then start a trend to the upside with a lot of volume. However, in the longer term, and then I'm talking about a couple of weeks, couple of months even, I'm leaning a little bit more towards the upside because of the indicators we have been taking a look at, the RSI, the MACD still going to the upside, and also because of that potential catalyst of the FDA approval in a couple of months. Now, if I'd want to start a trade myself, then I personally would be looking for an uptrend, so higher lows over time, and I'd also be looking at a daily candlestick closure above the 55 EMA and also above the resistance level at $2.40 with a lot of volume. If that all happens, I personally would be targeting a move to $3.30 more or less over time because of the previous resistance level, and then I would be re-evaluating the situation at that moment. So that's my interpretation of the technical analysis for Senseonics right now. And if you also want to be able to read charts like me, check out nisami.com/TA. And I'm also looking forward to hearing from you. Are you on the bullish side or are you on the bearish side for this stock? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!